Welcome to an abbreviated edition of the weekly video update. We'll look at the action in the market over the past week and then see how things look for the first week of August. Summer is moving along at a brisk pace. I want to just start off by saying that for those of you that watch these videos, this format and how I'm doing this is different than usual due to some situational as well as technological issues that I'm having to deal with right now. This is about as good as I can do for right now. My hope is to get back to doing the regular format of the videos just as soon as possible. So I appreciate your patience and understanding with that. I want to do higher quality videos. I'm just not able to do that right now, but I do feel that these updates are important, so I want to give you what I can for right now. We're seeing things really shift. Things have turned pretty much across the board positive on the daily charts. This past week, it did come out that if you go with the textbook definition, we are in a recession, even though some folks are trying to change that around. We really won't know until we can get further out into the future and then look back, sometimes months, if not quarters from now, to actually look back and say, oh, yeah, in the summer of 2022, they were in a recession, or it was not as bad as we thought, or it was worse than we thought. We really won't know that. We have to go with what we see right now. The markets are still really playing into this idea, at least the smart money is, of going from value back into growth. And that's where we're seeing the movement up in the indexes. And we're seeing a real improvement also with the weekly charts. And so I'll go through some of them. I don't have as many charts as I usually show you. I don't break it down as much as I usually do, but I tried to go through and just show you the charts that are telling us something right now and what is the charts that we can use just to give us a real idea of what's happening right now. But this first chart, this is the weekly chart of the S&P, and we were able to come back up above S1. We had spent quite a long period of time below S1. So that's really positive. If you look down at the bottom, you can see for the week, we've come back up to almost average to a little bit above for the volume. So now that we're at least trying to go higher, we're seeing a pickup in volume. Now that could go away, even if the market does end up going a little bit higher, but it's just something that we notice right now. The next chart just shows the trend where finally, after a long time, the ADX, it's still in a negative trend, but you can see how it's rolling over and it's starting to move below the moving average. The red line is still on top, but it's decreasing with the green line on bottom, and that is increasing. So things are improving here, but we have a long way to go to get back down to the 20 level. That's where we go from a trend to a non-trending environment. Now, if you're a little bit more aggressive with this indicator, you might signal this as a change in trend right now. If you're more conservative, you want to see it go down a little bit and possibly turn back up with the green line on top. So there's a lot of different ways that you can use this indicator depending on the strategy that you like to use. This next chart is the Swinland Trading Oscillator, which shows we're advancing based on price, but we're declining a little bit based on volume. So that's a little bit of a concern, but we saw volume kind of come into the mix, not this past week, but the week before. It was kind of leading the way from what could now be the low at about 36.66. So we're seeing volume just falling off just a little bit now, according to this chart. But it did lead the way earlier on before we saw the follow through in price. McClellan oscillator starting to get extreme positive, and we're seeing a lot of that in the daily charts too, with our short-term indicators and even a few of our intermediate-term indicators. They're starting to look a little extreme positive. Well, this on a weekly basis is also looking extreme positive. The PMO study that we do based on the price momentum oscillator, it's looking a little extreme with those PMOs that are rising. The buy signals are extreme, and we're seeing a lot of improvement with the PMOs that are above zero. The new highs and new lows are also starting to show some improvement. We're trending up on the 4-period simple moving average, and we're also going higher on the 10-day moving average. The bullish percent index is looking better. We're starting to get to an extreme positive reading, but this could still go higher. But just be aware that it's looking a little toppy right now. The elder impulse system is finally switched back to a positive signal. We haven't seen that since last spring. So now we're starting to come back up on the weekly charts. We still have this moving average above where we're at right now, which may act as resistance. But right now, this is looking much more positive. The parabolic SAR, for the first time in a long time, we have a dot underneath. That's positive. When the dots are above, that's negative. When they're below, that's positive. We saw the first shift in quite a while. The Chaikin oscillator longer term is continuing to go up. That is more positive. The Chaikin money flow is also switched above the zero line and is starting to give a positive reading. The force index also a little bit above the zero line. That's slightly positive now. The PPO, which I usually don't bring up all that much, it had really been moving lower through most of 2021 and into 2022. We're finally starting to see a little more significant cross than what we've seen in quite a while now. So that could be positive as well. A lot of folks really like this indicator. The Stoke RSI on a weekly chart is starting to look a little extreme positive. And the summation index based on price is above zero and advancing, based on volume is also advancing. And this, you see how the volume is going up more? There's more dots here. That just shows that earlier on, the volume was kind of leading the way before we saw that follow through into price. At least that's what I'm getting from this. The accumulation distribution, we moved back above the moving average, so that is positive. And the mass index, we had a signal generated a week ago, and now we're seeing the market really start to move. So this looks like it could be a valid signal. And then this does not tell us the direction. We have to use other charts to help us with that. But since we're going up and our charts are confirming that, the signal that this could be generating is a positive signal to the upside. The ulcer index continues to drop off. We're seeing sentiment really show a lot less fear than what we were seeing a week ago. It's still fearful, and that could ultimately help the market because the market likes to climb a wall of worry. And if a lot of people think, oh, no, this is just a dead cat bounce, oh, this is not going to happen. Well, a lot of times that's when it really ends up surprising folks. And then just about the time people say, okay, I guess we're going higher after all, I'm going to jump in, then that ends up being the top. That's why we spend all this time looking at these charts, doing this analysis, because we want to see things before they happen or as they're developing, instead of going, well, I guess I'll do it, and then being late to the party. Then on the next chart, the Heiken Ashi is looking more positive with the open bar. The Kegi has switched back to positive also. The point and figure chart, we have two new X's that were drawn in here, and we have a triple top breakout that could be happening right now. So that's much more positive. The 3-line break has a positive bar currently. Now we look over at the commodities, where we did see a bounce up over the last week, and it's still in an overall uptrend, but we've seen a lot of weakness in the CRB index. And this measures a lot of the inflation things. And when this is really going up strong, that's where growth stocks really tend to struggle. If this can show continued weakness, as we're seeing a little bit more in the daily charts, and then follow through into the weekly charts, this would help support stocks. Then the ratio between the NASDAQ 100 and the S&P 500, it's still negative overall, but we're seeing some improvement. The NASDAQ 100 is growth, where the S&P 500, yeah, it has growth, but it also has a lot of value in those stocks as well. The S&P 100, not doing quite as good. It was actually down a little bit. The 100 stocks tend to be more growth oriented, where the rest of the S&P 500 is a mixture. But we're seeing some improvement here, even though we've had some weakness, but this is still in an overall downtrend. Looking at all stocks, they're still in a downtrend, but we broke above this moving average and are starting to show some improvement. Looking at bonds, also in a downtrend, but we could be starting to build a bit of a base. And then based on price, we're starting to come up because we're seeing interest rates beginning to fall. Then the growth value ratio, even though growth is still been underperforming, we have really seen a big improvement. And that's what we're seeing with our scenario for the rotation going back from value into growth. And then just to look at the ratio between gold, which is doing a little bit better, and the dollar, which is now showing some weakness as stocks go up, this is starting to tick up slightly, but still in an overall downtrend. The dollar, which has been really strong, is still in an overall uptrend, both on the daily chart and here on the weekly chart, but we're seeing some weakness as stocks go up. So that is a conclusion of the charts that I have. So thank you very much. I appreciate you watching this. Please feel free to check out the daily videos where I try to cover some different charts and different things that I analyze. And I'll look at preparing the intermarket analysis video just as soon as possible.